Thanks for joining us. In this illustration, we're going to show you why the Rivers of Gold system is so valuable in finding investment property. Our first couple is using a realtor to find their property and is ecstatic to find a property at 10% below market. The other couple is employing techniques they've learned from the Rivers of Gold Probate business system that consistently enables our students to close deals at 30 to 40 or even more below market value. So let's get started by looking at houses in a neighborhood where $200,000 is the going price. However, working with a great real estate agent, our first couple got lucky and found a place that needed a bit of work at a 10% discount to current market values. That means they were able to buy this house at $20,000 below market, or just $180,000. So far, so good. They're confident that their plan to renovate the place, primarily doing cosmetic repairs like painting and installing new floor coverings, will make their property attractive to new home buyers. They put 10% down, or $18,000, and finance $162,000 using a 6% mortgage. From the time they buy it to the time they sell it, their carrying cost is $4,900. They've invested $6,000 in a bunch of their own labor to get the property ready for sale. When they're done, here's what the numbers look like. Market value for comparable properties, $200,000, less 10% discount to market. That's $20,000. Purchase price paid, $180,000 plus carrying cost of $4,900 plus fix-up cost of $6,000. So their money invested is $190,900. Okay, so they got nearly $191,000 into the property. With similar properties going for $200,000, they may be able to net around $9,000 before closing costs, if they can do the very difficult job of selling it by themselves. However, with very little experience selling properties or handling contracts like these, chances are that any buyer they do manage to attract is going to be looking for a bargain of at least a 5 or a 10% discount. Unfortunately, that would immediately put them in a negative position, selling the property for less than they have tied up in it. That's not something they want to do. If they want to sell it quickly, it may be worth hiring a real estate agent to market the property. If they do that, they need to make allowances for the realtor's 6% commission and at least a 2% closing cost. That determines their break-even price, and that number would be $207,600. And in order to walk away with a $10,000 profit, the house has got to sell for more than $218,000, which probably means listing it for something like $225,000. But the problem is that the property they got such a great deal on by buying it at 10% below market is now going to have to be listed for more than 10% above the market just to make a $10,000 profit for all their hard work. Now, that may work in a rapidly appreciating market, but it's an awful gamble to take when you're just getting started in real estate, especially when the market is relatively flat. So let's look at a really powerful way to find property at the kind of deep discount that makes renovating for resale or rental less risky and a lot more profitable. Using the Rivers of Gold Probate business system, our second couple is going to find a property that no one else even knows is for sale. And because of this, they have a great opportunity to buy the property at a much deeper discount to the current market. Working in the same neighborhood, they were able to find a house in probate where the heirs live some distance away. What this means is that the owner has passed away and the property is now in the estate. Typically, the heirs to the estate are the children or other relatives. And because houses are fixed in place and difficult to divide, they are frequently sold so the proceeds of the estate can be more easily divided among the heirs. The second couple was able to do a quick inspection before making an offer. They were reasonably confident that their plans to renovate the property doing cosmetic repairs would make it attractive to home buyers. But at the price they offered, they were confident that even if they needed to invest a bit more to get the property ready, they had enough margin not to lose any sleep. So let's look at the math on their property. Again, the market for comparable houses is $200,000. But because they found their property through probate, they were able to purchase the property for $140,000. That's 30% below market value and represents a saving of $60,000. Now, they put 10% down or $14,000 to buy the house, and they get a 6% mortgage. Like the other couple, they spent about 3 months getting the place spruced up and ready for sale and held it for 2 more months during the sale and closing process. Their carrying cost on that property during that 5-month period is $4,200. While doing the cosmetic repairs, they decided to add a few new items to modernize the property and make it even more attractive to first-time home buyers. By the time they finished, they've invested $12,500 and a bit of their own labor to get the property ready for sale. Well, this couple has nearly $157,000 tied up in their property. They want to sell it quickly because they've already found another probate property they want to buy. So they get a real estate agent to market the property for them. They make the appropriate allowances for the 6% commission and the 2% closing cost and arrive at a break-even sales price of $170,400. That means that even if they sell this property below market at $195,000 after commission and closing costs, they walk away with right around $23,000 for their efforts. But the realtor thinks that with all the work they've done, they should list it for $210,000 and take an offer of $205,000 or more. In that case, they stand to make nearly $32,000. And they're just down the street from the property listed by the first couple for around $15,000 more without all the upgrades that they've done. So whose property do you think is going to sell faster? And whose property is more likely to receive multiple offers and sell for full asking price or more? Which investor would you rather be? One couple found a nice property using a realtor at a 10% discount to market. However, the way they purchased their property, when it came time to sell, they had very few options. Either they had to sell the property themselves, or they had to price it at least 10% above market rates in order to make any money. And overpricing a property is a great way to help other people sell their properties. Imagine how anxious they must have been facing the very real prospect of losing money on their investment after all the work they had done and the bargain price they thought they'd found. However, by using the techniques from the Rivers of Gold Probate business system, our second couple found themselves in a completely different position. They had plenty of margin to work with, and that gave them all kinds of options, depending on how fast they wanted to sell and how much money they wanted to make. The one thing they didn't have was any anxiety over the outcome. You see, from the moment they purchased the property, they were reasonably assured of making $20,000 to $30,000 or more when they were done. It's certainly a far better position to be in, and it's one that you can easily enjoy as well with the Rivers of Gold Probate business system. And this system works equally well for people interested in acquiring rental property. Finding properties at such deep discounts makes these properties much easier to finance and show a positive cash flow right from the start. There's an old adage in real estate that you make your money when you buy. And that was certainly true in this illustration. Both couples purchased similar houses in the same neighborhood, but by using techniques learned from the Rivers of Gold Probate business system, one couple was able to purchase their property on far more favorable terms that ensured them a much more profitable outcome when it came time to sell their property. So, if you want to get started, just click on the link below.